Hi everyone, thank you for your patience. I was just waiting for David to hit the record button. So as I said, there'll be a recording later. And in fact, the recordings, because what we do is we chop these up into smaller sections as we talk about different topics and what have you. And you can find the recordings either at my YouTube channel, which is the Anna Cooling, or at Quantum Trading YouTube channel. Anyway, lovely to have you with us, as David has said. And before we start, can I just draw your attention to the disclaimer that I know you can see on your screen? As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Now, those of you who may not have been to one of these sessions before, we'll be looking at, we call it day trading, and it encompasses primarily the US indices, but we do look at some commodities, and sometimes we do stocks, and sometimes we do some Forex, but it comes under the umbrella term of day trading. And the approach that we use to the market is volume price analysis, which is looking at the price action and the volume and how it interacts. And the details of that, as many of you will know who come along to these sessions, can be found on Amazon, and in particular in the book A Complete Guide to Forex Price Analysis, which now has a companion book which has over 200 worked examples, and you can buy that as a little box set on Kindle. It is the Kindle version as a box set, it's not a hard copy one. And the reason we sort of quite a broad spread of markets, you might say, well, you know, why are you looking at a stock day trading? Why, you know, shouldn't you focus on one or the other? And as a trader, of course you do. You pick and choose the markets that you want to trade, and there's all sorts of reasons why you may select a particular market. But the reason we do this is because volume price analysis is you can apply it to any market and any time frame. The ticker, the symbol that you see on your chart is almost, I must say, irrelevant, because obviously each market has its own dynamics. It has it's its own news releases that you have to be aware of. It has particular correlations and relationships to other instruments and markets. But from the perspective of the analysis of the chart, it really doesn't matter what it is at the top left hand of the chart that you're looking at, because with volume price analysis, it's all there. As I said, it's the relationship between the price action on the chart, and we're looking at volume in two different perspectives here. We've got the active volume, which is at the bottom of the chart, which is the participation, if you like, in this particular instrument in this particular time frame. But as part of volume price analysis, one of the elements of VPA is support and resistance. It's classic technical analysis, if you like. And we look at support and resistance in two ways. We look at support and resistance that's price-based, and we also look at support and resistance that's volume-based. And to that end is why we have developed these very, very particular indicators that you will see on the charts. And I know we have a lot of our quantum users here, and so if you've got any questions, if you've never come across them before or never come across VPA before, please just drop your question in the chat box. And if you are one of our users and you want us to answer anything about the indicator or indicators that you're using, we're more than happy to answer the question for you. Now, the platforms that we're using at the moment, I've got MT5, David has got NinjaTrader. I think he's got TradingView, but I'm not sure he's going to be looking at TradingView at the moment. And the reason I've got MT5 and I'm not actually going to be looking at Forex is because we had an email from one of our users, and who kind of requested, he said, would we mind looking at one of the markets that's available on my MT5 platform, and it's also, you'll find these available also on MT4 platforms, which is basically a synthetic version of the Dow Jones, or the futures version of the Dow Jones is the YM, and it's called on my platform the US30 cash. And because it's what they've done, brokers, is obviously traders don't have the possibility of trading futures. They want to participate in this hugely liquid market. So what the brokers have done, when we started in Forex, you know, it was just Forex. And I think you could trade some commodities, David, but I can't seem to remember. It was very, very much tailored to the Forex pairs, and not that many as far as I can remember. But you know, you only have to look at what is available on your broker platform. This is this under Market Watch, and you can see there. I mean, I haven't even counted the number of pairs that are on there. It goes all the way down to, I mean, obviously the dollar South African rand. You've got the SEK, there's the Swedish krona, the Norwegian krona, and so on and so on. But then if you look below that, you will see a whole load of instruments that are available for you to trade on your platform, and you've got silver, gold, and then you've got a whole load of stocks as well. But she particularly wanted us to have a look at the US30 because, you know, we talk about the futures quite a lot when we look at the NinjaTrader platform. So this is why I have the Dow Jones, and in some ways, if you come from a Forex background and you're on one of these, you have one of these instruments that you want to investigate a little bit further, in some ways it's much more straightforward than Forex, because you're looking just at you've got a single focus instrument. With a Forex pair, you've obviously got a pair, so you've always have to be aware of what is driving that pair. Is, you know, take a sort of dollar CAD, is the dollar Canadian, is it moving because the dollar's being, you know, more because the dollar's being bought, or is it because the Canadian has been being sold? You constantly have this balance that you have to try and establish between the pairs. What is the drivers? There's fundamental news. There's fundamental news obviously applicable to the indices as well, but there is a cycle of fundamental news that you have to be aware of with Forex that is very specific to Forex and will cause a currency or currency pair to move. And then, of course, in Forex as well, you also have the issue of sentiment. Now, we have market sentiment that applies globally, but in Forex, it applies to a particular currency. You know, for example, is the Aussie moving up or down? Because that currency is a commodity currency, it's a risk currency. So when the market is positive and moving higher, the Aussie will be moving higher as well. And you say, well, that's just the Aussie. Well, what is the Aussie pair that is likely to be moving? And it is likely to be the Aussie yen. All sorts of reasons. So, but you come to something like the US30. As I said, it's a synthetic contract, and you say, well, how does the pricing work? Well, very briefly, this is quoting 24,000. It's 080 at the moment, and if we just hop over to let me have a look where investing.com is. I've just got to find myself around my very, very cluttered computer screen. There we are. Investing.com, here it is, a 24,075. What is it? I think it's probably 24. Yes, this contract is tied to the cash market because what's the futures at the moment, David? What's the YM at the moment? Have you got the YM?
It's 23,980.
23. There's always a difference between the futures and the cash. So it's not, you know, you're in the same ballpark, but as I said, this contract is obviously following what the cash market is doing. So what you could do, you could possibly have another chart of the cash market, which you can find, as I said, investing.com is a great site for, it tells you immediately what market sentiment is. We've obviously got the Dow that's going up, that's gone up 400, that is up at the moment 400 points, although a lot of that gain was this morning. But the one you need to watch for sentiment, we always say, is the S&P 500. That is the benchmark for sentiment that the market uses. If the S&P is going great guns, then, you know, market is good, positive, everything, it's very much risk on. Traders and investors are prepared to take on more risk. They're not looking to move into safe havens. And of course, we look at the VIX. The VIX is down to 30. Don't forget, in this current crisis, it's spiked up to, did it get to 80, David? 80, 90? I mean, huge numbers. The last seen back into 2008. So this is the workspace that I have for the US30. As I said, it's a synthetic contract. You can check out, you know, from your own broker what it's being quoted as either the cash or the futures, but you tend to find it is the cash market. And it trades 24 hours. It's a Globex. So what you will find is, let me just bring up, say, let's have a look at the 15-minute chart here. So what you will find is, because it's 24 hours in Globex, which is basically the 24-hour market, you will find you will get an inrush of volume, a volume surge, as soon as the physical market opens in the US. And that's when you see the volume at the bottom here, the participation level rise exponentially. Does that invalidate the volume price analysis methodology? No, because volume is it's relative to the session in play, and it's also, you have to read it in the context of that participation. So as I said, it's as long as you're aware of that, then you read it accordingly. Now, how do we approach it on the MT5 platform? Well, what I've done here, first of all, I've got a daily chart for the, let's call it the Dow, for want of a better word. And the first thing the daily chart tells us, it gives us an idea of what are the trading conditions that we are likely to face if we are trading on the faster timeframes. And the first thing this chart tells us is that actually the Dow, although it is going higher, it is sitting above the volume point of control, which is a good thing from a if you were long at the moment in equities, but it's actually in a consolidation. It is actually range bound. It's kind of moving sideways. There's been a lot of volume driven into these candles, and at the moment it looks like it's on the up as well. But what that tells you is when on the slower time frames, the instrument that you are looking to take a trade on in the faster time frames is in this consolidation pattern. In other words, it's range bound. It tells you a number of things, one of which is that maybe the range isn't going to be that fantastic in the faster time frames, and secondly, you may experience a lot of, well, on the positive side, it's called good two-way price action. On the downside, it could be quite whipsawy. It could be very choppy. And, trying to get hold of a good trend, if you like, in the faster time frames is going to be a little bit tricky. So in other words, the risk on any trade that you are thinking of taking is going to be that little bit higher. You're probably not going to stay in the trade very long. And when you're in this kind of trading condition, what you have to be aware of, support and resistance levels become ever more important, because they not only on the focus chart that you are trading, that's usually the faster time frames, but obviously in multiple time frames, because support and resistance levels, as you go onto the slower time frames, they become more and more important. Now, the way I've set up my charts on this profile for MT5 is obviously I've got the daily chart to tell me what are the trading conditions that I am likely to face. I've got my 3-minute chart, I've got a 15-minute chart. I've actually got a chart here which I can toggle between let's go 5 or 3 or 5, doesn't make any difference. And what it is, when I go back to support and resistance, what we have done as part of our VPA, our quantum tools, is we have developed an indicator that's based on the Camarilla protocol, the Camarilla principles, and you actually get 6 levels with this indicator. Some levels are more important than they're more significant than others, but what I've done is I've just put it on one chart on its own, so I can see these price levels very, very clearly. I have the volume profile down here, and what I've also done, because obviously this is a Forex platform, is, what I said earlier about the Aussie dollar, and if the Aussie dollar is rising, then it's risk on and there's more risk appetite in the market. Well, I have an immediate view of the Aussie dollar without looking at a chart, because one of the indicators in our quantum suite is a currency strength indicator, and what I'm seeing here is I'm seeing the Aussie, which has been rising. It's kind of had a bit of a dip at the moment, but it may be possibly looking on the up. I don't like the look of this very much, which is the yen rising, because that is another risk currency. When the yen is rising, then it's kind of a bit risk off. The market is getting a bit nervous, so I really want to see that fall. That was a really nice move there, this divergence. We see a nice rise in the Aussie and quite a steep fall in the yen. And I've actually got a dollar on here as well. Now, if they are going to start moving in the same direction, this moving higher and possibly the Aussie just not going anywhere, well, that also tells me is that I'm possibly facing another phase of congestion, which is something I'm probably aware of, given that the daily chart is in a range. And we can see here, this is the 3-minute chart, didn't actually get the R4, the fourth level on the Camarilla is actually quite important, both from a resistance and support level. Generally speaking, when it breaks through, then that is considered a genuine break, and it actually got to the 5th, but it hasn't got to the 6th level. So these levels tell us, they give us significance to the price action, but also act as a kind of target, if you like, for where the price is likely to go next. Now, that's on the very fast chart, but the beauty of this indicator that we have developed is once you go to the hourly chart, and this applies up to the hourly and the day, is the levels change. And that is because on all time frames up to, but not including the hour, the levels are refreshed every 24 hours. So every time the market rolls over, you get a new set of levels. But on the hourly chart, the levels are here until the end of the week, after which on Monday, you get a fresh set of levels. So that gives us some context to, you know, why is this price suddenly stalled, if you like? And we can see the stall here at the R3, and we only have to look back at this chart to see, this is the hourly chart, that in fact it's stalled going right back to the 5th a couple of days ago. It kind of tried to break through, drop back, try to break through, drop back, and the current move, if you like, it's when we came off the S2 level. So I know, regardless of what I'm seeing on my faster charts, I'm going to have a bit of a battle if this is going to go any higher. With regard to the trade per se, when you're in one of these trading conditions where you've got a lot of choppy price action, the daily chart is in a narrow, maybe congested phase, this is where using a non-time-based chart, such as a Renko, really comes into its own. And we use this for whether it's Forex, whether it's the, as I said here, the Dow. In fact, each one of these bricks is worth 7 points. The indicator works in as much that it sets these values for you. You apply it to the 1-minute chart. Where is it? Maybe the brick size has changed. What is it? Yes, it's 7. It comes up as 768, but it's actually 7 points. So each one of those bricks displays once 7 points go through the market. And the indicator works very, very simply. You read it in conjunction with, just move that out of the way, with the time chart. You look at support and resistance. So if I just put the 3-minute chart, you see how choppy it is, how spiky these price action, these candles are. But once you overlay it, or you have next to it a Renko chart, it smooths out that spikiness that you see in the price action. We know why we've stalled. We've stalled at the 24,000 up here, which is a significant level on our Camarilla. And we can see the levels displayed on the price resistance and support, the indicator that's for MT5. We can see this lots of sideways movement here. The move off the VPOC is this little move that we've had here. It's been quite a nice move here. And the way we read this indicator is the way we've developed it. You have these little trend dots and you have the monitor. Essentially, when you have a clear confirmation of the bright colors of the bright blue and the bright blue down here, that is signaling a potential entry. Whether you take that entry is entirely up to you. This is not systematic, this is a system, but it is not a systematic automatic trading system. You are still in control of any decision. Now you can see here the amount of choppiness that we've had in this particular instrument. You can see the colors moving fading in and out of the dark colors, bright colors, but we've finally managed to catch a little bit of a trend, and now maybe it's reversing lower. That's transitioned into this intermediate color. For a short, we want to really see that move into a bright red, and this is where we go back to are levels to see, well, if it's going to go short and it's going to turn over, where's it going to turn over to? And I can put any time frame on this because I said the levels apply up to the hour. Let's have a look. Let's just take that down. Didn't get to the, well, it could potentially go all the way back to the R4, which is 23,900, a nice round number. But we'll see whether it manages to hold and just basically wait out and see what the rest of the session is going to tell us. So that's using the MetaQuotes platform. This is the same on MT4. Mine just happens to be MT5 to trade a market that most traders don't necessarily access either in terms of the futures. It's a synthetic contract, but it allows you to participate in one of these markets. And I could have had the NQ, or I could have had the S&P. I can have gold, I can have oil, but the principles of VPA apply. Our indicators apply, and that's really up to you to decide what you want to trade. Anything you want to add to that, David? Is that okay? I'm going to pass over to David. We're going to look at the you've got the NQ, haven't you? You've got the, oh, well, he's got the YM. He's got the futures version of this contract. It's actually one of the YM is in fact David's preferred future, isn't it, David? Yeah, that's the one that if he's going to trade anything, it will be the YM. Right, if you've got any questions, as I said, just pop them into the chat box.